in my holding recently. A lot of things happened last week and this week. So you had, I guess, like the Chinese quantitative easing. So basically, basically just like China decided to just like revamp the stock market. Basically, kind of just like give some sort of stimulus check to people just to be able to just like buy back shares, uh, you know, offer gifts, stuff like that. So Chinese market are having a big inflow recently, actually, and I feel like that kind of makes sense. That actually makes a lot of sense because when you look at the Chinese, most Chinese companies relatively to the US, they trade relatively cheap. So due to that, basically last week I've been buying up some Chinese companies. So I had like mainly three companies on my list. So I had a PDD Holding. So basically, just think about like they're basically the one behind like Timo. Just like that's basically like they're mostly known for being the one behind Timo. So they're kind of like they basically like there's kind of like Alibaba. I mean, they're probably more like Amazon. So they have like Timo and a couple of other companies in China, but they're mostly known for Timo, right? And as you guys know, Timo has been kind of like eating some shares from Amazon. The other one I've been adding also is Tencent. Tencent was always the one I always wanted to add. So Tencent is mostly known for WeChat, so they're basically behind like WeChat, which is basically like the super app from China. The last one is actually Futu. So Futu is basically against a financial company. They're basically a market company, so they're behind Momo. I don't know if you guys know about Momo, but it's kind of like this new investment platform that came out like about 2 years ago when I was like first year, stuff like that. And they're also basically kind of like financial app in China. So whenever Chinese want to buy like stocks, mutual funds, like anything financial related, investment related, they basically go through like Futu. And again, because like in the Chinese easing, they mainly mentioned that. Let me just go. They mainly mentioned that they wanted people to basically like be able to buy back shares, actually buy back shares. And yeah, they also like I believe like this year this is like a Chinese event where they basically just like buy a bunch of gifts for people and stuff like that. That's also like motivates people to just like buy stuff, go on Alibaba, go on like Temu, go on all those like retail basically companies just like buy stuff, buy gifts and stuff like that. So the reason why I bought most of those like companies, PDD, Tencent, and Futu was because again, I remember just like back in 2020, right, during our own I guess like quantitative easing, right, when they were just like giving money to everyone. When you look at it, like the stock that actually did the best. So you should look at maybe the stock that did the best in 2020. I mean like consumers stocks basically. So if you look at 5 years ago, you look at Amazon, you see like in 2020 for example. So you have 2019, Amazon was like crazy that year, like really like had the best performance that year. And it literally came back this 2020, right? This 2021, 2020, 2020, right? And then it came back, it matched back that high literally like last week. That was basically when it came back to the high from 2020. Because like all those like retails basically did like extremely well during the usually because again when people get money they mostly just like shop with that money, right? They don't like they most of the time they probably just like buy stuff. Yeah, again same for Alibaba when you look at it 2020 again. Like yeah, true you had like all the tech companies, but most like retailers did extremely well in 2020 because again people were stuck home. You had like all that money flowing to your bank account, and people just like went on the shopping spree. That's why I kind of like follow that again. I mean, some people may feel like this is trading, but again, like you gotta adapt to the market, right? You gotta like be able to like look at the macro environment and take action basically. So that was pre-action. So I had some cash that I had. So I basically, as you guys probably see right here, I sold some of my some shares. So I reduced my position in Nvidia. So I've been reducing my position here. And again, I have like more than 100% gain in Nvidia at this point. So I made a lot more than this, but so I've been just like taking some profit on the table right there and just like buying those companies. So this I opened this position last week, those three positions. I don't know why for this not showing up, but that's what's going to happen. And I also on my screen, as guys have been talking about, I also added a new Chinese ADRs. So this is basically the link to the app right there. So if anyone want to like use this screener, so this is basically kind of like the version I have online. So the version I use personally is different, but it's kind of like I probably say it's kind of like really close to what I use. But again, so I have this like so I added the Chinese ADRs to my screener. So you have like those companies. So again, like the reason I bought PDD was because like PDD was always on my list. So it's like the top company on my screener. So it's called like 67. So it's not as good as like I probably say it's not as good as some S&P 500 stocks. But when you go more into detail, you look at the fundamental score, you realize that the fundamental score is actually pretty good compared to a lot of like other companies. So the one I also what I mentioned is Futu, and then so if I can probably go to like a risk analysis and show you guys what is Futu. All right, so you see like Futu, yeah. So capital markets, financial service. So again, it's basically like a brokerage. It's a brokerage firm. So you can see like digitalized equity brokerage firm. So Sha ratio is actually pretty good when you look at it. Sha ratio is pretty good. So it actually kind of like pretty much you probably see kind of. I mean, it's pretty good Sha ratio. Usually like you want it to be at least one. So getting close to one again, you're gonna realize that like the last 2 years, 3 years actually Chinese have been I've been beating down a lot, but even then. So again, January 2020, that was like 2019 around there. It's just been going really going down on a downtrend. Then it's just like, kind of like going back up right here since like the easing, quantitative easing has been happening. Volatility is quite high, and then the value at risk is also quite high. So you have like different This is a risky stock. Like when you look at all the stocks, so like when you look at the value at risk, the VAR, and at 95% confidence level, you can see like you can basically lose like 6% in a day. That's like what's how usually happens. And then when you look at the 99%, it can basically look like 11% in one day. So it's a quite a volatile stock. You definitely gotta realize that. But overall, it basically outperforms the market. So you can see like the alpha is pretty good. It doesn't really have any correlation with S&P 500 again. It's in a different region. So I like to see like I usually don't like to have like some correlated stocks as my holdings. But this is like more description about like Futu. Um, yeah, that's kind of what I wanted to show about that. I can also go to like stock screener and get a better view of like the fundamentals. I can also download this like Excel and go through the Excel and get like a better view. But I don't want to do it now. Can probably just like get on the app and do it. But again, as you see, like operation margin is pretty good. For capital markets, it's actually great. The revenue growth is quite fast. And then P ratio again, like it has been going up. When I bought actually the photo of it like this morning, and then when I was when I was researching it originally last this one was last Friday, I guess. The P was like 25. So yeah, I didn't act. I mean, I'm not a trader, so I didn't want to do it. I wanted to make sure that I had everything in mind and decided to like pull the trigger. But the P kind of like went high quite fast, and then you can go through like the AI analysis and stuff. So again, you can see like some chart if you guys like. Usually, I'm usually like a visual person. I like to like see charts and stuff. I don't like read charts, but I just like to like just kind of like have an idea of like how the start's been going. You can see like again like in 20 that's what 2021 2020 you got like a big just like huge pull up and then just like going back down and then it's just kind of like going back up recently. You can look at the A analysis. It gives you more information. So you have like debt to equity ratio, P ratio, earning growth, high beta, the profit margin is 44, operation margin is safe. You can get like more information regarding photo like the fundamental data. So I have like some kind of indicators right there. Yeah. So I see like right now, food is actually that is actually crazy. That's basically being 95 is actually quite high. Usually because usually like above above 70 is already considered like above. 95 is like wow, that's actually extremely. Gross profit margin is wow, it's actually quite great. And then some investment decision. Again, I read this thing, but again, it's kind of like just usually it's when I want to go quickly through the data without having to download Excel. I can just like quickly go through this one and base decision of base my decision on that. But sometimes I just like to go deeper into the analysis, go into Excel, go through stuff. The one I really actually like is PGD, as I mentioned before. So it's quite cheap. Again, when you look at the fundamental indicators right here, I mean, I haven't seen anything better than this in a while. Like 95 revenue growth, earning growth is 140%, operation margin is 33%. I gotta realize that China has been like raising interest rate until literally last week. So you gotta realize that that's actually an amazing, fundamental right there. Technical, I'm not finance alpha. I mean, it definitely outperforms. The beta is like one, so it doesn't really like vary that much compared to the S&P 500. And then it's the highest Chinese area I have on my list already. That's the highest one, the best one. I mean, based on my screener. And then again, you got like more data right here. So the max showdown. So if I go risk analysis and I type PDD, so again, consumer cyclical, internal retail. So again, as I mentioned, like kind of like similar to Amazon. It's true they don't have like AWS, they don't have like all the sort of stuff Amazon has, but again, they're mostly known for like Tmall, online marketplace. They have like fitness item, auto accessory. Like yeah, they basically like those things about like basically like an e-commerce giant. That's basically what they are. And again, what I was mentioning, sharing guys before is that usually in China, when people have like money on some stuff, they usually just like buy stuff or they would probably save. So there's one option either they save. What I've been saving is like putting into like financial markets, or they just like buy stuff. That's why I've been buying Futu and PDD recently because I just realized that usually the two things Chinese probably do. So again, I personally, again, my personal opinion is that uh, Chinese companies, most of them actually, are quite cheap compared to American companies. They're cheap for a reason, right? Because like nobody wanted to invest in China until last week actually. So now it's like who want to invest now? So again, when you look at Alibaba, for example, if I maybe look the month, 36% in like a month, and then personally like Alibaba is one of those like companies. I used to own Alibaba in 2022, but I got burned. Frankly, I sold it like 2022 with a loss. Then I was like, I'm not probably not gonna get kind of like get into that. But if it wasn't for that, I may have bought it. But even when I look at my screener, yeah, it doesn't actually rank like the point. But yeah, that was kind of like pretty much my new, I guess, like my new buys. The reason behind why I bought it. Again, I showed you the fundamentals. I showed you the fundamentals. I kind of like talk about my decision making behind that, why I bought it. Because again, you can't just like buy a company because like the fundamental is great, right? You gotta like have the fundamental must be great, but you also have to need to like know actually why you're buying that. So the last thing I will be doing today is just going through the Russell. I guess I'm gonna go through the Russell 1000 and just run this analysis for the Russell 1000. I basically just like see which are like the top 10 ranking stocks on the Russell 1000. I guess today. Um, yeah, that's pretty much what happening. So kind of like 7% in about like 5 days. Probably say it's pretty good. 7% right there. I don't know why focus not showing up, and then 10 cents about 3%. Yeah, and regarding my location has kind of changed. Again, this is kind of my first time going out buying outside the US. I live on this like portfolio. It's kind of like my first time going out of the US portfolio because again, like I used to own some Chinese stuff back then, Neo, Alibaba. That was more like when I was in high school and stuff. And then I sold some. I sold Alibaba like in 2022 because I just didn't really see it going anywhere. Uh, yeah, it's pretty much what I have for today. Just like waiting on the analysis to kind of like run, and then we could probably just like go through maybe like the top 10 stocks on the Russell 1000 and see what happens. I can also go through, I guess, like my my list right now. So I have a NetEase, I guess, as I showed you guys on the Chinese ADRs. NetEase was like on the API is actually the I guess it's like the Indian ETF that's basically cover like the top 50 Indian companies. This is definitely something I've been looking up recently. India, I definitely want to like start investing in India. I also got like convinced recently after like Jimmy Dimon had an interview with Jimmy Dimon, the CEO of Chase. I guess JP Morgan had an interview with Jimmy Dimon. Uh, he had an interview recently talking about he was talking about India. That was like 9 years ago. He basically was saying, well, I think India will be the new China as the US seems to diversify with one possible future adversary. So I'm definitely, you guys should definitely kind of like go through this like interview, just basically to listen what they're talking about. Yeah, definitely, it was definitely insightful. Kind of like convinced me more. When I look through the holding or ETF, I just feel like I like better the ETF. I went through the ETF, I went through the shit looking at the NAV, net asset value, and I just kind of realized that this one kind of just like better for me because I kind of like I researched the top 10 holdings. I kind of like felt like it was better for me. So we have like the Reliance company against industrial. As my video last week was telling how bullish I am on industrial, right? So I myself I own like a couple of two industrials, and then again, Indian is a growing company, so like financial institutions is quite important. You have Infosys working, they're recently working with Nvidia to like build new AIs and then like deploy a consulting AI fleet. Then you have oil again. You need energy to develop again oil, and then basically just through like just like energy and like Tata Group, it's the Bank of India. Like I went through this like different holdings. I went through the top 20 holdings, and I realized it was quite quite good. I also went through this actual company who actually hold. Look at the expense ratio, the NAV value, or the P ratio again. When you look at the P ratio like it's 17, and then when you look at the P ratio for S&P 500, really like nothing. It doesn't actually compare, right? So like year to date performance is it's actually went down, but it was actually higher than the S&P 500. When you look at 1 year, it's actually higher than S&P 500. Even the 5 years return, same. So India is definitely an interesting market to be in. That is definitely the case. India is definitely an interesting market to be in. Another one I was also looking at was Taiwan. I was looking at the Taiwanese market and the Brazilian ETF also. Again, I just feel like I want to kind of like start to look elsewhere. That's kind of like what I want to start doing now. Kind of just like look at all the stuff. All right, so I'm gonna come back to this, the rest of 1000. So like that's a top 10 stock. So Nvidia, no need to give a description. You have Anet. Anet is also like in semiconductor space. Yeah, it's my watch list right here. I thought about buying it at some point when it was like 350, but I thought about it, and then it just like went up, and then I just like missed. So this is a corporate company, Eli Lilly, TPL. I think this is like an oil and gas TPL. I can probably just check that real quick. TPL. I'm pretty sure it's like Texas. It's an oil and gas company. Yeah, yeah, that's definitely an oil and gas company like that. Yeah, that's definitely an oil and gas company. Operation, yeah, that's definitely an oil and gas company. The Texas Pacific Land, yeah, that's an oil and gas. And then Clark is also in semiconductor. Deck, yeah, Deck is a shoes company. I also like hold a lot of Deck in my portfolio at this point. Mm, yeah, like again, the fundamental is definitely great. I don't. I feel like the P ratio is quite high, the kind of high. Even the free cash flow per share for Deck is kind of low. But again, they are they're growing quite fast. As shown here, revenue growth, earnings growth is quite fast. And then get like again some AI feedbacks. I've been on Deck recently. It hasn't really been moving as much for the last. It takes too much time to load right there, but you can probably just go on risk analysis and just type Deck. So you can see an analyst coverage is 22. Recommendation is buy. This is the short ratio, basically like how much what is the percentage of one of shares being shorted. The target mean and target median price, target high price. You can see right now like the target mean price and the median price. So basically this basically means that the graph is like, let me remember my stats class. Left, right skewed actually, or usually that's basically like, yeah. So based on this, just that, like, if you just want to base yourself on analyst rating, right? I don't really do that, but if you just want to, be quick, and you compare actually the actual deck price right now, you kind of realize that deck is trading below the actual value right there. And then the Sha ratio is good, beta is so it's alright, the alpha is alright, and then correlation to the market is quite high. Yeah, I mean it's okay, it's not like nothing crazy. Again, that's really what I don't like about deck. Like I mentioned, you have like really like crazy swings. I've been holding this company for about a year now. I've been kind of like taking gains, buying back in sometimes when it goes down. We kind of like see you usually have like some really like wild swings, and then just like go with that. But over the years, it usually just like goes up because again the fundamentals are pretty good. Yeah, so that's why I'm going to be stopping. Again, can like use the screener, try it out, see how you want to go. So you have like you have like all the stocks. That's like a thousand stocks right there. So we use like Wingstop for example. Is that Wingstop? I think that's Wingstop. Yeah, that's definitely Wingstop. This page is definitely Wingstop. So Wingstop, revenue and stuff. Yeah. Again, this is also another company I was thinking about buying last year. No, actually a year and a half ago. I was outside of the US and I kind of like saw Wingstop. People were just like Wingstop. First of all, was like two times the price, the US price, and it was like full, and I was like, that's that's actually amazing, right? So yeah, I just didn't buy it because I just felt like this type of P even like when you look at the fundamental, it's not I feel like the P doesn't really justify this. And then when you look at even when you look at the total score, it's just 56, so it doesn't really justify. So let me look at Tesla. Yeah, Tesla is 55, so it's on a hold period. The alpha, I mean, I'm not surprised. Sharp ratio, trend. Yeah, you can probably just like, yeah, earning growth is it's not really. Yeah, Tesla is quite expensive. A lot of stuff are baked in this price. Because even when you think about it, they have a